So we talked about a lot of indicators, talked about momentum, we talked about trend, we talked about oscillators and all that. So today we will talk about moving average. We have EMA, we have SMA. So today we will talk about MA, moving average. We have exponential moving average. We have SMA, then we have SMMA. But today we will look at MA, just the MA, moving average. We will look on how to apply or use it on your chart. I know there are a lot of people who are saying indicators are not good, blah blah blah. Yes, everybody is right in this market. I always say everybody is right in this market, in the forex industry. Every single person um is right. Yeah, I haven't started sharing my screen yet. That's why I will start sharing soon. So those you're recording someone's microphone is been making. Okay, all right. So we talked about moving averages and a lot of indicators. I hope you all got your how do you call it, your notebook to put something down, or you just have to. If you are not a person that likes writing like me, I'm a visualized person. I just look at things and memorize them. That's me. That's how I learn. Huh. So if you are like me, just sit attentively and then watch and learn. There are some people they have to write them before they can, like after the class they go over to get understand. Me, I'm not like that. I just sit down, pay attention, watch it, and then visualize everything. That's my style. So I can't force you to do my style. I can't force any person to do my style. We all find what works for us and then we do it. You get it? Find what works for us and then we do it. Please, if your background is noisy, please kindly mute your microphone. If your background is not noisy, you can leave it like that for us to have a clear meeting today. Today I won't talk much. I'm tired. I'm hungry as well. Okay, so let's go to our charts first. We go to Euro USD and Euro USD empty charts. Euro USD thing here. Yeah, Euro USD chart. I hope you are paying attention and everybody can hear me clear and soundly. So the chart is loading. As I was saying, a lot of people are saying, a lot of people say technical indicators are bullshit. You don't need them. Somewhere or the other, they are right. I always say everybody is right in the market. Everybody, every single person is right in the market. But the thing is, every strategy that you use, every strategy, even if you use the strategy that institutions are using, you're gonna lose. You cannot win all the time. That's the thing. You cannot win all the time. So somebody is saying, I have 100% win rate. Sometimes I just sit down and then keep quiet. You get it. So you can't win all the time. See, there are losses. That's business. That's the part of business. You cannot win all the time. To get profit, you must lose. You get it. So you have to subtract your how do you call it, the cost of production from the amount you sold it. So let's say you bought something at 5 cedis, or let's say 5 naira or 5 cedis. and then you sold the thing for 7 cedis or 7 naira. So after selling it for 7 naira, you don't have profit of 7 naira. You have to subtract the 5 cedis, the 5 cedis you used to buy the object from it. So when you subtract 5 naira or 5 cedis from the 7 naira or 7 cedis, you're gonna get 2 cedis or 2 naira. So the two, that will be your profit. So that's how business is. If you enter into trading from the business perspective, you understand that losses are not sin in trading. They are not sin. They are not bad things. They are business. Like, it is business. You get it? So when we encounter losses, it's all part of business. We just have to you just have to have this is a probability game. Just have to have you need to have an edge in the market, and you need to have more probability, as in your wins should be more than your losses. Okay, someone raised hand. I think Techno Phantom 9. Please, is there any question? Techno Phantom 9. I don't know your question. Techno Phantom 9. Please, what's your name? Techno Phantom 9. You've raised your hand. I don't know why. You're not saying anything also. Okay. Let's go on. You're not saying anything. So that's how it is. This business is all about probability. You get it? It's not about winning all the time. It's not about winning all the time. Okay, I've made $20,000 today. And no, it's not about what you make today. So we should all think about the long term. So at the end of the month, that's why I tell traders that we don't have 30 days in a week, in a month as traders. We have only 20 days. Now, out of the 20 days, just take, let's say, 15 days for Met. So let's say you win 15 days, and then the rest you lose. But make sure your wins are much bigger than your losses. You get it? So that's how it is. You don't need to win all the time. You cannot even win all the time. So please and please again, you cannot rely on all indicators. Just try and find what works for you, what fits your environment, your psychology, and your understanding. To get it, and then you use it. But today I'm gonna explain to you certain things. I'm not asking you to falsely use them, but it'll give you an edge if you know about it. If you go back, test them for yourself, and then you know, okay, this is good for myself, with my psychology, with my risk tolerance. I can use this indicator to benefit myself in the long run. So let's jump into this without wasting much time. So this is a daily candle. But before that, I would like to check from the daily bias first, and we have our daily candles right here, beautifully. I know a lot of people feel with patterns and all that. Yeah, patterns somehow they work. Yeah, everything works here. It all depends on how you use it, your style of using it. So let's add our indicator to this chart. So let's add our indicator to this. So I hope most of you don't know how to add indicator to your chart. So this is TradingView. This website or chat site is called TradingView. So you go to your Chrome and then type tradingview.com. So this is what you're gonna have on your screen. This is what you're gonna have on your screen after typing tradingview.com. So having this on your screen, You go to indicators. Check on your top left here, as you can see where my cursor is. Go to indicators, you click on it. Then over here, you have, here is the search bar for indicators. So you just type in the indicator you are looking for. With today's illustration, we are going to use MA, moving average. So we type in MA. So after typing in, we just saw it right here, MA. You can decide to start it to add to your favorite, or just click on it. So with educational purpose, I'll just click on the star to add it to our favorite, and then I'll come back here and click on it again. We will do it one after the other. After clicking on it, we close that menu, and then we come and check. So with the default, the chart system is giving us a default of 9-period moving average. To get it. With the default, the chart system is giving us 9-period moving average. And we have, so you can change the length to any number. Let's go change it to 1 period, and let's see how it's going to look like. So we change from 9. Let's go to do it 1, and let's say do it 1. So when you made it 1, see how it looks like as a 1. See, just crossing. That's the 1. So we change it from 1 to 2. This is how to change it. You click, you go, just put the cursor on this. The first icon you see here is something like I. The second one is the settings. You click on the settings. You have input here, you have style, you have visibility. So you come to length, and then you change the length to 200. So today, someone's microphone is on. Can you please mute your microphone? Techno Phantom 9, can you please mute your microphone?
Hello. Hello.
Hello. Let's go on. So with this, you have inputs, you have style, we have visibility, we have length here. So the length is where we change the parameter of the MA, of the moving average. So on this length, today's class, we're going to use 20 moving average. We're going to use 50 moving average, and then 200 moving average. So these are the moving averages we are going to use today. So take note, we're going to use 20, 50, and then 200. 20, 50, and then 200. So let's put in our 20 moving average first. So we have our 20. Let's go to our style. Our style, what color do you think we should give to our 20 moving average? I want this class to be interactive. What color should we use for the 20 moving? Let me know what color. What?
Blue.
What?
Blue.
Blue. Okay, it's already blue.
This is the blue color.
Yes, it's okay. Let's leave it blue. So we click on OK. Since we want the blue color, we click on OK and leave it like that. So now we have our 20 period moving average. Now let's go and add another indicator to it. The same MA. We've added our first MA to it. We will add another MA because I said we are going to use 3 MAs today. 3 MAs. 3. So we go in again. Since we started or we made it our favorites, the MA is already here. You get it? So we just click on the MA and then it will add to our chart. After clicking on, you can decide to add all of it before closing, but I want to do it one after the other. After clicking it, just go and close it. It has been added to your chart already. So over here, we go inside to this setting. We go to input. We change the length. We change the length from 9 to 50, 50. Then we go to style. Okay, so the style, what color do you think we should use for this the 50 period moving average? What color do you guys think?
Red.
What red?
Yeah.
All right.
It's red.
Red, yeah.
Okay, let's use red for this. Okay, so now we have our red, and now I want us to change the thickness. So let's use this as the thickness of this. Okay, and then all right. So now we have our 20 and then our 50. So which one is our 20? Which one is our 20?
The blue.
The blue is our 20 and 50. The green is our 50. Nice. So one more.
The red, though.
The red is our 50 and then the blue is our 20. So we are left with one more MA to add to our chart. So we go there again. We click on the MA again to add it to it. Now we go, you see the default is 9. So we go here, change it from 9, we go to input, change it from 9 to 200. We go to style. Should we leave it as yellow or change it?
Let's maintain the yellow.
Yellow is okay.
Okay, okay. So we click on okay. Now we have 3 MAs on our chart. We have 3 moving averages on our chart. But as you can see here, they are all, it is messy up here. You can't see everything clear. Everything is messy up here. So for you to know how to use it, the first thing that you must consider is when should you use them? On what time frame should you use the moving average? See, on this candle or this time frame is daily time frame. You see, we don't get clear entries and exits, clear view on with the indicators, with the EMA moving averages we've added onto it. So let's change from the daily candle, the hourly candle. Now we are on our hourly candle now. Let me zoom out. Let's see something. Now I've zoomed out, and now we are on our 4-hour candle. I've zoomed out, and now we can see something clearly right here. Okay. Oh, these people are worrying me. Damn it.
As in,
If I click on join for free, these people, like, if I reset it again, they'll get rid of everything. If I don't want to use my personal one, I have a lot of things on it. I can't take everything off and then bring it back again. That'll be a long process. Don't worry, I'll add the indicator shortly. There we go. I'll do it very fast. Quick. Don't worry. Okay, so we are good to go. Now we have our you have about 200, you have about 50, and then you have about 20 MA moving average. Over here, you can see something here that, what do you see right here? I want someone to tell me something right here, right from this side. I don't know how to do this, but I think maybe I can try. Okay, see if I can try something. Oh, sorry, I was trying to do something, but wasn't working in our favor. Mm, oh, oh, that's it. Okay, all right. So let's continue. Okay. I hope you all can see my screen.
Yeah.
All right, all right,
Yeah.
all right. So from this side, from where my cursor is, see the yellow line here, this yellow line is the 200 moving average. It is the 200 moving average. The 200 moving average. So with a 200 moving average, and then the red one is 50 moving average. 50 moving average. 50, 50 moving average. So as you can see here, with this 50 and then the 20, we have our 20 here, which is the blue. So we saw over here, this was a downtrend. This was a downtrend all the way here. And then you see the blue, which is the 20, crossed the 50. That was the first cross. It crossed the 50. When the blue crossed the 50, see, the blue crossed the 50 over here. This candle started closing above the 50 moving average. This is the 50. The red is the 50. The blue is the 20. The candle started closing above the 50. Then the blue line crossed the red. So it means the blue, the 20 moving average has crossed the red, which is the 50 moving average. And now, when the 20 crosses the red, you don't buy, you don't do anything, just wait. Do you get it? With this style, you need patience. With this style, you need very, very good patience. Because with this, we are not using price action, we are not using anything, we are just focusing on what the indicator is telling us. And we want to use only what the indicator is telling us to see if possible we can make something out of it. So right after candles closing above the 50, we wait. So we saw the 20 period moving average crossing the 50 period moving average. We wait for it. We wait for it because when we see something like this, we are assuming that the trend line, the trend is about to end, and then there is a reversal. So with this reversal, we don't just jump on it. We wait. See, this is a 4-hour period moving, 4-hour time frame. We wait on it. You can decide to enter it, but you just wait on it to get it, because we are learning something. Anytime you find an indicator, you back test it. You try them with on the demo, then you see how it works with your psychology and with your emotions. So with this is a 4-hour time frame. So when this crossed, we wait, price went up all the way here, and then the price started closing above this 200. And as I told you yesterday, when prices start closing above 200, then it means the trend has somehow stopped from the downtrend and it's now coming to start or has already started an uptrend. Do you get it? So price started closing above it. So when price started closing above it, the 20 moving average also crossed the 200, but it took a while before the 50 period moving average crossing. I think the 50 period moving average crossed over here. So this is beautiful. After the 50, the 20 crossing, you wait for the 50 to also cross. The 50 crossed, then there is a retracement right here. You enter it, place your stop loss right here, and then room all the way up here. Or you see, as the 50 period moving average is serving as a strong resistance and a strong support, first support, second support, third support. You see, it's serving as a trend line automatically. Serving as a trend line, you don't even need to use the trend a rule or something to indicate or do something. It's serving as a dynamic trend line. Somebody's something is, don't know if you can see our message. Oh, I can see your message now. Please, can you hear me clearly? Can you hear me clearly? We can't hear. Someone said they can't hear. Hello, guys. I think someone's microphone is making noise. That's why. Let me check. Let me check what's what. Hello. Can you all hear me? Please show by hands or put in something in the chat. Let me know if everybody can hear me now. Can you all hear me now? Okay, okay. Hello, can you hear me now? If you can't, please, those who can't,
I can hear you, but not clearly.
not clearly. Oh, give me a sec. Hello, can you hear me?
Yeah, I can hear you
Yes.
now.
Claire,
Yes, please. It's okay
Yes,
now.
clear.
Scanity is saying he can't hear me. Please check your side. I can hear you loud and clear. Scanity, please check your side. It's not from my side because I've done all that
I
is
can hear you
necessary.
clearly now.
Okay, right. Please, can you all mute your microphone so that we can have if you want to see something, just put it in the chat. And if I want you to talk, I will just let you know so that everything will be cool. All right. So as we can see here, we entered a trade here, but it took a long time. See, from this side, from 2nd April, you just wait. You enter a trade from 2nd April all the way to 16th April before you enter a trade. From 2nd April, no trade to 16th. This strategy takes time on working on the 4-hour time frame to get it. You can break it down to trade on the lesser on the lower time frame when you get to understand how this this 3 MAs work well. You get it. So it takes time to get to know the cons and then the pros out of that, and then strategize your way out. You get it. So that's how it is. So with this, we are just using something to illustrate or to teach. So over here, you entered your first feed right here. You just went all the way up. Let's say you are aiming for, let's say 30 pips, or let's say 70 pips or something like that. So let's say 70 pips. So I think this one gave you 112 pips right here. So 112, and this is a swing trade. because this one is a 4-hour time frame. It's a swing trade. You don't need to be behind your screen all the time. So you set a trade of a target of 112 and then a stop loss of 37. You get it? 37 pips and a target of 112, and that will give you a risk to reward of somewhere 1 is to something. So you are risking 37. So 37 times 2 is going to give, so let's say it's around 1 is to 3 risk to reward ratio. So you're getting somewhere 1 is to 3 risk to reward ratio. So your first TP is hit 100 and whatever. Just wait for it again. See, we have a dynamic um support right here, and then you enter from this side again. You can decide to enter from this side, or you wait for it to give you a nice support here on the 50 moving average, and then you enter again from this side. So from this side, set your stop loss right here below here. So let's say 36 stop loss, and then today with this we don't have much TP or something like that. So we have 100, we have 100, 100, and then our final one is right here. Um, we enter a trade here. See, everything is just hitting on this. With this, when price when the 50 and then the 20 MA crosses the 200, we don't sell on that zone. We just buy. Just we look for buy opportunities when 20 and 50 period moving average crosses the 200. We look for only buy opportunities. So we look for sell opportunities when the 50 and then the 20 moving average crosses below. You get it? Crosses below. When they crosses above, we don't look for sell over there. We don't sell the pullbacks. We just enter the impulse. You get it? So we look for buy opportunities when first the 20 period moving average and then the 50 period moving average crosses above the 200 moving average. So this, I think this will be our last trade right here, and we target, let's say target stop loss somewhere 34, and then our target will be somewhere 86. So we've gotten somehow 86. So with this as we can see here, price broke all the way down here. We didn't find a better entry here. So what we do is we just wait to find another better entry before we enter. So what we should be looking at is when we see price closing above, to get it, when you see price closing above the 50 moving average, that's where we buy. To get it, when we see price closing above the 50 moving average, that's where we buy. So with this red line, when price starts closing below the 50 moving average, then it means it signals that, oh, maybe the trend is about to end. Damn it, this thing has come again. How? I think I should go use my personal account. Don't worry, let me go use my personal account. Give me a second. Come on. Guys, please, I'm coming here. I'm coming. Very sorry for this pitch ups. I have to clear a lot of things from my chat. Go right. Okay. Let me share the screen. Okay, I hope you guys can see my screen now. So let me add the indicator to it. I think my indicator bar is somewhere here. It's hidden below the which indicator. Okay. Indicator of MA3. Oh. First one is 200. 220. Okay, very sorry for what happened. I think we're working over here. Okay, that's good. So let me just do some markups right here, and then we continue. So I think we took, let me choose this for example. So we took our first trade right here. Damn it, just give me some time. Okay, so we took, I think I can't I can't add some markups because I have a lot of markups on it, and I've decided to let me show it to you. I have lots of markups in my chat. It will get you confused. So I think we enter the first trade right here, and then it went above here. We exited the second trade here, and then our third trade here. So we've entered 3 trades here, and the first one was 100 and something. So let's say 100, and then this one was 80. So 280. So from the period of 19th April, from the period of 19th April to all the way to 29th April. So that's 10 days. That's that's 10 days. So 10 days you've made 280 pips if you follow it and then do it well. So from 29th you couldn't make any profit because the price was doing the opposite. Because the rule we have with this is we need to see the 200 the 20 period moving average above the 50, and then the 50 above the 200. That's where we enter trade. Since this crossed here, we assumed that the trend is about to end, so we wait, we don't do anything. But it was a false break, so price started closing above the 200 again, then it closed above the 50. So then we enter again, we enter for a buy. So this will be our third buy, our fourth buy from this side all the way here. then we close. Price came all the way down here. Let's see, we entered again above here, or let's see, our target was here and then we couldn't hit our target and stop loss got hit. Did you get it? Our stop loss got hit. Price was consolidating here. So let's see, we enter again here for a buy. We went all the way up here. We exit, or we can just hold on. Price retraced. We enter again, it goes up. We trace, we enter, it goes up. Oh, damn it, damn it. See, it enters again, it goes up until it comes below, starts closing below the 50. You get it? When price starts closing below the 50, then you pause. You don't enter trade, you pause, you wait. You get it? Because we are trading when prices are closing above the 50. You get it? When prices are closing above the 50, and then the 200 is somewhere hanging on top of the 50. But when prices are closing below the 50 and the 200 is tightly close to the 50, we don't trade it. We just leave it and wait. So from this place, from 26th May all the way to 10th June, you will not be trading if you are using this. Do you get it? You don't be trading because your setup hasn't confirmed yet. That doesn't mean you are trading one pair. You get it? That's why when you are trading with this strategies, you need more than, let's say you need 7 or 8 or 9 pairs. You get it? You just put the EMAs on it. So when you see the potentials, you just enter. You get it? When you see, if today this one is not this one hasn't set up, you move to the next. What you see, the pair that you see, your rules and regulations are forming up on smoothly, that's where you trade. So from here to here, you don't trade, you just wait for it. So as you can see, price closed below the 200. That means there's something happening because price has closed below the 200. So when price closed below the 200, some people will say, okay, then it's a downtrend, so I'll enter a sell room. But it was a force. There was a liquidity. I won't bring liquidity. It was a force break. If I bring, some people will get confused. It was a force break. So those who entered, the market movers will just push market up. But the market will be going down, but they'll push market up to go clear all their stop loss, because when they enter here, they put stop loss somewhere here. Clear all stop losses. Those who be entering, they'll be clearing them all the way until it breaks again. You get it? It breaks again, it consolidates. So after breaking, it consolidated. But then the 20 and the 50 was still above the 200. So you wait, you don't do anything. And until this side, the 20 crossed the 200. Still you wait, you don't do nothing. So here that the 50 was lying above, the 50 was lying above the 200. But with this, the 50 hasn't crossed yet. So you just wait for the 50 to cross. And then the 50 crossed over here. So your first sell trade will be here. So enter a sell trade from this side to this side. You see, this strategy is a little bit. So if there's no setup, I won't trade. Yes, this is how it is. You don't need to trade all the time. Find what's works. If this is what works for you, my brother, my sister, use it. Use it. You get it? Use it. You get it? Use it to in your benefit. You get it? So let's say you have this simple strategy. You don't even know what price action is. Just go by your rules and regulations. You get it? When prices are closing below your 20 and then 50, and then above below your 200, you are just looking for sell opportunity to get it. Price started closing above the 220. You don't sell or buy, you just wait. Price closing below them. See, price started closing below them here, you sell. Price close above, you wait. Hit here as a resistance, you sell. Start closing above, you wait. So you just keep waiting, keep waiting, keep waiting for clear setup, and then it'll be giving you at least some pips. See, from this side to this side, from this side, and see this one is the current price markup here. The price is now moving above. It's closing out. They are all closing above the 200 moving average. They are closing above the 200 moving average. But over here, with our rules and regulations on this 250 and then 20, you cannot enter a trade here because it has not given a clear confirmation. Our clear confirmation to enter a trade on this is when the 200, when the 50 is above the 200, and then the 20 is above the 50 and above the 200, and prices are closing above the 50, then we buy. This is the rule. If you have to sell in this market, when the 50 MA is below the 200 and the 20 MA is below the 50 MA and prices are closing below the 50, then we sell. So we have rules and regulations to use all indicators. If you don't know them, you think, oh, all indicators are not working. You get it. They work if you have the patience to wait for price to unfold. Do you get it? But this newbie traders, they want to trade every setup. That's where market movers will just grab your money, blow up account, and not see everybody in here. See, I've blown up lots of accounts. I've failed before. See, you cannot see. There's nobody in this market that will say has not failed before, blown up account. No successful trader will tell you. No successful trader will tell you you have not made everything. Hey, then you are not a trader because where we learn is from mistakes in trading. So with this, I think some people are sleeping or something like that. So I would want to ask questions on the 20 50. Now you can open your microphone and then ask your question. Someone is saying, what is the 50 and the 20, or did I hear it wrong? Okay, so let me identify them. The 50 here is the red lion. Red is 50. 20 is blue. 200 is yellow. Again, red is 50. 20 is blue. 200 is yellow. And here, oh, please, any question? Any question?
One question is like, is it only in the 4 hour time frame that you can use that the indicators, like we set it on 20, 50 and 200.
Mm-hmm.
So
Okay,
I want to ask if it's only in the 4 hour time frame that can be useful.
Okay, so with your question, let me go change the time frame and then we see. See, with a 4 hour time frame, you can see nice and clear setups, right? I hope you all can see nice and clear setups on the 4 hour time frame. When you see an uptrend, you see. When you see a downtrend, everything is clear. Let's go to 1 hour time frame and then see. So on a 1 hour time frame, you see, you don't have clear, even though it's giving you some, you get it, It will give you some, but you need to study it from the higher time frame, get the understanding, get the concept, and then you start bringing it lower, lower, lower. Do you get it? So every indicator and every indicator length, let's say 250 and then 20, every indicator length have specific time frames that are suitable. You can use it on all time frames, but some time frames are suitable, and then they give you clear setups straight with an edge. Do you get it? So if you go to the 15 minutes chat, it will give you noise. Like see, everything is crossing, messy. You get it? Like it's not that clear. But when you go to the 4 hour time frame, you see the intervals, you see like things very clear. 200, the 50, and then the 20, everything is clear, and then you see it grow. So any other question?
So if you want to use the 1 minute time frame, what length is good for someone to use? What length do you think that?
Okay. So if you want to use 1 minute time frame, then you should find a lesser length. Let's say if you are using the 1 minute, I have tried the 5 minute time frame before. There was those parameters I was using. I was using 8, I think 16, 8. No, it was 6, 8, 16. Yeah, 6, 8, 16. Yeah, I've forgotten. So we have to bring the time frame down. But today we are using 4 hour time frame to get it. 4 hour time frame. We will go on to explain with different time frames. But me personally, I really like seeing things from the broader perspective, from the bigger time frames. Because when you go to the smaller time, there are a lot of noise over there. There are a lot of noise over there. But when you go to the larger time frames, you see everything clear, and then you find. I know scalpers, they want to use certain strategies to get. Yeah, we'll get to that. We'll get to that with the 1 minute time frame. Yeah, we'll get to that. I'm not no more of feeding on 1 minute time frame. My list is 5 minutes. So don't worry, we will get to that level. We have 6 months training intensive. So we get there. You cover everything. Yeah, you must do everything. So any other question? Oh, any other question?
Yes.
Hello, any other question? I don't young lost Sanity. I don't see mine on empty. Oh, Sanity, can you please ask your question because I can't understand what you're trying to say. Please, can you ask the question again?
Yo, boss.
Yeah.
Hello, can you hear me?
Yes, I can hear you loud and clear.
Yeah, what I mean is that these MAs of my MT5, I don't see them on 4 hour time frame. Unless maybe
Yeah.
1 hour before I can see them.
Okay, you are using your phone. You are using your phone. That is why. If you open them on your PC, you will see them. You get it? On the phone, see, unless you zoom out, like you make the candle small, little. So you see the 200. No, I always advise people to be using the bigger screen to do analysis because with small.
How about those who don't have,
What?
how about those who don't have the bigger screen?
Those who don't have the bigger screen. Who don't have bigger screen?
At least not all of us.
Yes, I know at least
All of
not.
it.
I know at least not all of you have bigger screens. You get it? when I started trading, I was sitting with only phone. I was doing my analysis on phone. Uh-huh. I found my way out for squeezing out things. Someone like Michael Blackquiz, like he's been doing it. He does analysis on his phone. Yes, he squeezes out everything, like brings out things to get it, and then try and find his way out to get it. I know not everybody have bigger things yet, yeah, but if you want to do something, you need to find a way and then do something. So on the MT4 on the phone, you can do it. You can do it. Just zoom out. You have to make the candles small. Before you can see the 200, the 20, and the 50. Yeah. So Fortune, are you asking a question? Don't say you just like the strategy. You have to practice it. Again, you have to practice. What,
I hear. Oh, no.
all right. So any
Hello?
other question? Yeah, I'm listening.
Okay. Like I was asking, how will you know when the trades are about to form? I don't understand the question.
Oh,
The 20s, 50, and 200.
oh, okay. Let me use this here as an example. See where the yellow line here is the 200 moving average.
Yes.
The blue
Yellow
you see
200.
here, is 20.
20.
The blue is
Yeah.
20. That's why I said you should bring pen and paper so that you write them down. The blue is 20, and then the red is 50. You get it? The red is 50. Over here,
Yellow
see, yellow is 200, blue is 20, red is 50. So over here, the blue, the shorter time frame, the shorter M is crosses before the longer M is. So this one is shorter than this, right? The 20 is shorter than 50. 20 is shorter than 50. So the 20 crossed before, you see, 20 crossed here. I can't use markers because if I click on it, all my charts like markups will come on it. So can you see the curves are where the hand is?
Yeah.
Can you see? The 20 crossed here. That means it crossed when the candles started closing below, but not here. Started closing below here. That's when the 20 crossed. So you wait for the 50 to also cross. The 50 wasn't here, the 50 was above. So you wait for the 50, and the 50 crossed here after this candle closed. You get it? The 50
Yes.
crossed here after this candle closed. So
Yeah.
after this candle closing, you see this strength, there's a strength cell in this. You just look for a cell here and then you enter a cell. You get it? The same way applies to buying. The same way applies to buying. See, you wait for the 20 to cross. The 20 cross over here. We wait for the 50 to cross. The 50 cross somewhere here. But we wait for it to retrace a little and then we enter a buy. You get it? When prices are closing above the 50, we buy. When you immediately see price closing below the 50, you wait. Wait till price starts closing above 50 again, then you start buying. When it starts closing below 50, you stop, you wait. When it crosses the 50, 20 crosses below the 200, then you'll be looking for sell. So over here, when prices are closing above the yellow, which is the 200, you don't look for sell here, look for buy. Only buy. When prices are closing below here, you don't look for buy, you look for sell. That's how it is.
When it closes below, you look for sell.
When it closes below the yellow line, which is the 200.
The yellow, yes, the 200, yeah. You look for a sell.
We look
Then
for
when
a
it
sell.
closes above, you look for a buy.
Look for a buy.
Buy trade. Oh, okay. Although,
So any other question? This video will be recorded. So if you don't understand, I couldn't upload yesterday's class. I'm very tired today. I'm even sleeping. I'm even feeling sleepy. Any other question? Is any other question? Any other question, please? Any other question? Hello? Any other question? Okay, if there's there are no questions. A question from my end. Okay, please, you can go on and ask phone. Please ask your question.
Is someone talking? So I want to ask a question.
Please inform. Talk.
So, like, I wanted to ask for the MA. Okay. What I didn't actually get is how the how do you call it? You said if this thing the candlestick is crosses above the 200 the 200 level, right? That's when
200.
you enter a buy.
Okay. I think let me illustrate it right here for you to see.
Okay. Yeah.
Can you see the screen here? Can you see the screen here?
Yes, sir.
This is the yellow. This is the yellow line. This is the yellow. Before you look for buy opportunities, first rule, look or watch if the 20 moving average, which is the blue, has crossed above this yellow. And as you can see, the 20 has crossed above. The second, has the 50 also crossed above the 200? Yes, the 50 has crossed. Then we will be looking for buy opportunities when the 20 and then the 50 has crossed the 200. Do you get it? When 50 and 20 crosses the 200, price will start closing above the 200. Are you clear now, Inform?
Yo, boss.
Yeah.
Yeah. Please. How many MAs should one use on this on a chart?
What?
How many moving average should one use on a chart?
So with what we are doing here is 3. We have MA20, MA50, and MA200. But what we are doing now, we have 3 of
It's
them.
3.
Yes.
So anyone can choose the number of MAs that you want to use or what?
You can choose million, but the thing is, what we are using, what we are illustrating today, we are using just 3. So you can choose to have 50, 10, whatever, any amount. But we are focusing on this strategy, what we are learning today. We are using only 3 moving averages, which are 200, 50, and then 20 only for this particular. We have different styles. We will get to that. But today, what we are doing today is 200, 50, and then 20. That is what we are doing for today. We will go on and on and on with different parameters and different lengths, and then do different things also. So I hope your question has been answered. Or it's still not clear?
Yes, please.
You are still not clear.
I'm good now.
You are good. Okay. Great. So I think Inform, your question was in limbo.
I said I understand it. I do not have a question.
So you understand it now?
Yes.
All right, okay. So, is everything clear to everyone? If you don't understand, please let me know that I'll finish and then go.
Yes.
All clear?
Yeah.
Everything clear. All right. So with this, you can go practice. I'll save the video. I'll see if midnight or when I wake up, I can upload it. I'm very tired. So thank you all for coming. I think we had few people in here. You had somewhere 9 people. Yeah, and it's cool. Today I'm very tired. That's why. So please forgive me. I wasn't able to teach to my expectation. I'm very tired. But um, from tomorrow, maybe Thursday, Friday, and Sunday, you'll be having more fire. I think if there's no or there are no questions, we end this class um, for now. And then thank you all for joining today, and God bless you all. May God make us great and strong, and may we all be billionaires. In the name of Jesus, we pray. Amen.
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 So bye to you all. We're gonna meet in the chat.
Bye, boss.
Yeah. Bye.
Scan it. Where you dey?